Thanks for joining us on Parlance. This is Bloomberg Quint. I'm Harsha Subramaniam.
Good afternoon. I'm Ira Dugal. Let's get you the headlines. Indian markets hold on to gains for the second straight day. The Sensex back up above the 36,000 mark.
A weaker rupee may not be enough to help TCS make up for a drop in margins when it comes out with the first quarter numbers today.
No such worries for IndusInd Bank, which is expected to report a steady set of numbers.
Two-wheeler sales shows signs of moderation in June. Passenger and commercial vehicle sales remain robust.
And Mumbai continues to face heavy rains for the fourth consecutive day. The IMD says this may continue until Thursday.
Well, it's raining and markets are still holding on to gains. Neeraj is here with a closer look as always.
Yeah, don't the markets love me? 2 days on a trot. But no, it's a decent day of gain, Harsha, again today. And today, the volume picture is slightly different than what the case was yesterday. So before we get to specific movers and what is gaining and what is not, just the volume picture should come up on your screen. The F&O volumes will be a key indicator out there. Slightly pointing towards maybe just some more uptick on the volume front. Remember, yesterday at the same time we were at 13,000 crores on the NSE cash. Today at about 16,000 crores, safely pointing towards above average volumes, both on the F&O side as well as on the cash side in today's session. What's doing well? Actually, save for healthcare, almost all key indices seem to be doing okay. So which is one good sign. Two, heavyweights like Reliance Industries are participating in the rally today. So healthcare is the only sore spot. Every other index is doing well. Reliance Industries is up. There is strength in IT with HCL Tech and Wipro, both of them in the green. HCL Tech for reasons obvious because of the buyback announcement. But Wipro has eclipsed HCL Tech as the top large cap Nifty IT gainer in the session today, about a couple of percentage points higher on fairly decent volumes as well. And amongst the indices, when real estate is up about a couple of percentage points, I think BSE Realty or NSE Realty, either of the two indices will come up on your screen. You get a sense that momentum, or people are like wanting to chase some bit of momentum right now. Amongst the broader end of the spectrum, Sterlite Tech top of the heap even now, so 3 days on a trot, and again showing that a badly beaten down stock which comes up with good piece of news tends to get rewarded. So that one is up about 5.5% odd. A bunch of other small caps and mid caps, the likes of Trident, some hotel stocks, etc., seem to be doing okay. But by and large, the mood is positive. Heavyweights participating, and not enough losers on the benchmark indices, which is helping the market breadth too in the session today.
All right, Neeraj, thanks so much for that. That's the big picture from the market perspective. Earnings season kicks off today with two heavyweights, IndusInd and TCS, both Nifty companies reporting their numbers. Most analysts are hoping that some of the momentum that we saw in the first 3 months of the current financial year will continue into the second quarter as well. Darshan is standing by with a big picture on the earnings season. Darshan, let's start with what the broad expectation is.
Yeah, so broad expectation on the Nifty is close to 20 to 22% growth that will come in. But before we do that, let's take a recap of what happened over the last 4 quarters. It's been a decent fourth quarter that happened last time around. The number of strong earnings also came up significantly. This is for the Nifty 50 companies only, and the number of weak were rather stable. So basically, a lot of companies that were reporting inline set of numbers reported strong set of numbers. But what can we expect this time around? As far as the broad estimates are concerned, Kotak is the most conservative. This is the estimate for the Nifty or the Sensex company, whichever they track. 17% for Antique, but the others like a Deutsche Bank, JP Morgan, Edelweiss and ICICI Direct see a 20 to 22% EPS growth for most of the Nifty, as a consolidated basket. But individually, let's take a look at some of the sectors. Basically, first of all, what will aid for first quarter earnings? It was a low base on the lead up to the GST and demonetization, and weaker rupee to help a lot of export oriented sectors. So let's take up individual sectors. Let's take up auto. Low base will add the numbers. Rural demand is strong, exports are healthy, and this was all seen in the monthly sales number. So auto as a pack is expected to come out with a strong set of numbers. IT, weaker rupee will aid the top line for the company. Historically, first quarter and second quarter are really strong for them, but no major changes are expected as far as guidance are concerned. Let's talk about the FMCG space. Stabilization is seen in the trade channel. The last time also, volume growth was very strong for the FMCG company. The consistent consumer demand that's coming in, and input prices have been stable, which will aid margins for the company. The next sector we want to talk about is the metals. Metals probably will be the strongest given the fact that demand is there, volume offtake is there, prices are also much higher this time around. The only concern probably will be trade war and dollar strengthening, which will be reflected in the later quarter earnings, not this quarter. Some of the other sectors, cement, high power and freight cost will wane on them. Most of them reported weak set of earnings in the fourth quarter, but demand is clearly there. That will help the volume growth coming out for the company. Capital goods and infra, weak execution, weak order flow, except for the road companies, which have had very, very strong order flow numbers. So those probably will report strong set of numbers. Oil and gas, higher crude prices to aid upstream companies. The dollar will definitely impact the downstream companies, and there will be inventory gains that probably will come into them. Some of the other sectors which are left, and I need to speak about them, financial asset quality will improve after RBI intervened in the last quarter. Most of the balance sheet cleanup was done. Bond yield impact may be seen on the PSU banks, and retail focused bank as well as NBFCs will perform better than the corporate facing banks this time around. The other sectors that we want to talk about, pharma pricing pressure to continue. Domestic facing companies will do better. MNCs will do the best this time again. The other sectors, telecom is left. So media and entertainment, higher advertising spend. The cinema companies will be very muted because no blockbusters came in. Let's pull up the other ones. Telecom is there. Pricing pressure will continue for most of the telecom companies. Some of them may even report loss. So that's the broad sense that we're getting in on the earnings season this time.
Darshan, thank you for that. Let's talk about the first one off the block. IndusInd Bank will be the first of the private lenders to report numbers today. It's unlikely to spring any surprises. The retail-focused bank is expected to maintain its strong growth trajectory. Shraddha is standing by with what the street is pricing in for IndusInd Bank. Shraddha.
Well, yeah, that's correct, Harsha. No surprises really expected. It usually reports a steady set of numbers, and performance is likely to be better than that of the peers. In terms of the key numbers, the net interest income is expected to come in about 20.6% higher at 2140 crores. That should be supported by a strong loan growth and steady margins. Net profit is expected to grow by about 23% to 1027 crores. That's the number that the street is working with. Net interest margins, on the other hand, are expected to remain steady sequentially, closer to that 4% mark. Remember, the bank had raised their MCLR by 40 bips in Q4. That apart, when it comes to asset quality, the corporate book is not has very low stress as compared to some of its peers. So they have very low exposure as far as the NCLT accounts are concerned, and even near nil restructured book. So the gross NPA number is likely to remain steady, closer to that 1.2% number. As far as the loan growth number is concerned, that is expected to come in at about 25 to 30%, led by both the consumer and corporate segments. Within consumer, CV financing, personal loans and credit cards are expected to drive growth. So then what will be important to watch? Continued momentum as far as the vehicle finance book is concerned, traction as far as the non-vehicle consumer lending portfolio is concerned, margin outlook amid higher rates and increased competition in the retail segments, because remember, in the previous quarter, the management had highlighted aggressive pricing in certain segments like LAP. And finally, the progress on Bharat Financial merger, and if there are any comments with respect to synergies that are expected. So, but overall, no surprises expected, likely to be a good, strong quarter for the bank.
All right, Shraddha, thanks for that. We'll come back to it. Expected to report during the course of the hour. Moving on to the largest company in the country by market cap, that's TCS. They'll report earnings later in the day. The technology giant is expected to post a muted set of numbers in the second quarter with some contraction, first quarter with some contraction seen in margins. Agam Vakil is joining us here with the numbers.
Well, it is going to be a mixed quarter for TCS, at least as per expectations from Bloomberg's projections. We're likely to see a 1.8% growth sequentially in terms of dollars, and when it comes to operating revenues in rupee terms, we're likely to see an uptick around 5.8%. Margins could contract by around 100 basis points to 24.4%. Consequently, could see profit grow just by as much as a marginal 0.5% quarter on quarter. Now, among the reasons why we are expecting a strong uptick in the top line is a lot of large deals that the company has signed over the previous couple of quarters, specifically large deals with Transamerica, M&G Prudential, as well as Marks and Spencer's. Do remember a few quarters ago, the company also signed deals with Scottish Widows as well as Nielsen's, which are largely front-ended, and that is also something that could aid the top line. However, the wage hikes will come into play this quarter, and that's the reason why we are expecting to see some decline in your margins. But do remember, there's also the the currency tailwinds that could come into effect for this quarter, considering we have seen a depreciation of well over 5% of the rupee against the US dollar. That said, in terms of key watchables, we're keeping an eye on what the management has to say about the banking and financial services vertical, as well as what we are seeing in terms of the trends in the digital services. But on the whole, we're expecting a mixed quarter from TCS.
Akram, thank you for that. Those numbers will be out later this evening. Dish TV, meanwhile, reported a strong set of numbers in the first quarter. High subscriber addition aided the company's numbers. Saloni is standing by with some more details on Dish TV. Saloni.
So Dish TV posted a good quarter. The numbers came in well above the street expectations. Now remember, Videocon D2H merged with Dish TV earlier in March, and hence Q1 FY19 numbers cannot be compared on a year-on-year basis. So we are comparing the numbers sequentially. So if you look at the financials, revenues were up nearly 8% at 1655 crores, while net profit was down 77% due to high tax write-back that was seen in the base year, while EBITDA grew at a substantial 40% to 556 crores, while the EBITDA margins expanded by 7 percentage points to 33.6%. Now, in terms of subscribers, Dish TV added nearly 301,000 subscribers in the quarter went by, making the total base of 23.3 million subscribers. Now, the management attributes higher subscriber addition was largely led by a sports-heavy quarter. This was on the back of higher viewership due to IPL season. Their average revenue per unit grew 6.5% sequentially to 214 rupees as compared to 201 rupees seen in the previous quarter. Now, management attributes this increase in ARPU due to the price hike that they have taken in the last quarter, while 44% of the subscribers were on the HD platform. The HD platform for Dish TV in total contributes to 17% of their subscriber base. Now, in terms of merger synergies, as per Dish TV, initial merger synergies have played out really well for the company, and management is on track to attain 510 crore of synergy benefits in the current fiscal year itself. And lastly, speaking of one brokerage note that has come up post the numbers, IDFC maintains outperform rating on Dish TV after their Q1 numbers has beaten the street expectations, and they believe that merger with Videocon will create significant synergy benefits for Dish TV going ahead.
All right, thanks so much for that, Saloni. Let's move away from earnings, though. The Shashakt resolution plan that has been proposed by bankers to speed up bad loan resolution empowers a few large lenders to make all of the decisions. This is because there is an intercreditor agreement that will be signed between the lenders. Vishnath Nair is joining us with details of what this intercreditor agreement actually says and what its implications are. Vishnath.
So, what we understand, and this is something that the lenders have already said, is that for accounts where the outstanding debt is over 50 crore and where multiple banks are involved, there is going to be an intercreditor agreement that is signed among these lenders. Essentially, this appoints a lead banker, typically on the basis of the highest outstanding debt that the banker may have to that case, and then this lead banker would be in charge of doing all of the procedures required to conduct a resolution plan in the case. Right from agreeing what is a sustainable and unsustainable debt to the point of appointing specialists, to the point of coming up with contours of specific restructuring schemes. All of these decisions will be made by the banker, and finally, when a resolution plan is shortlisted, that will be put up for a vote, and after 66% of the consortium votes for it, then the plan goes ahead and is being implemented in the company. So now, 2 or 3 key points here. The issue mainly is that, firstly, State Bank of India is being the largest lender in the country, is the lead banker in nearly about 60% of the corporate cases. So what will end up happening is that State Bank of India will become in charge of resolving multiple cases that will be resolved under the Shashakt scheme. Additionally, because there is a low threshold for a majority, that is 66%, it is likely that the smaller lenders in the consortium may not get the kind of representation that they need when a resolution plan is being implemented. Moreover, they will also be required to take the kind of haircuts that the larger lenders may be able to do with their capital base. The smaller lenders might find it a little difficult to implement these things. Now, what bankers as well as experts are saying is that this may not be such a bad thing, because typically the JLF mechanism, which was the older mechanism where such a thing used to happen, lenders to get together and decide on restructuring, that failed because a lot of smaller lenders used to hold out in the discussions and probably delay the process. So the new scheme, the intercreditor agreement, addresses that problem, and therefore larger lenders would be able to push through some of the restructuring schemes and thereby achieve faster resolution. That is what some of our sources are telling us right now.
Vishwanath, we'll leave it there. Thank you so much indeed for joining us with those details. Meanwhile, commercial and passenger vehicle sales continues to grow at a healthy pace. However, two-wheeler sales have lost steam in June. The latest data released by SIAM, the industry body, shows that buck and truck makers saw sales rise by more than 40%. Yatin is standing by to take us through some of those numbers. Yatin.
Afternoon, Harsha. And if you look at the SIAM data, it has been on the positive side, at least for the commercial vehicle space. And in general, the auto industry has been doing well for the past few months. Now, if you look at the total, sales for the industry, that has seen a growth of nearly 25%. That is led by a stronger growth in the export markets, which is close to 32.5%, and also the local commercial vehicle sales. They have seen a growth of nearly 42% for the month of June. Total units sold for the month were a little over 80,000 units. Also, if you look at the two-wheeler and three-wheeler sales, they have seen some good momentum coming. In fact, the three-wheeler sales, due to various Indian states, uplifting the permit ban, have seen a good amount of momentum, 56% growth seen there in the three-wheeler space. The two-wheeler space also has seen a 22% growth on the back of stronger rural markets. The local passenger vehicle sales have seen a 38% kind of a growth. Total sales coming at 2.73 lakh units, with Maruti Suzuki, the market leader, accounting for almost half of that figure. And we have the car sales also, which have seen a good growth. So on an overall basis, if you look at the SIAM data for the month of June, they have been strong. But we had the SIAM president speaking to Bloomberg Quint, and he spoke about how really the infrastructure sector is helping the commercial vehicle space. So let's listen in what he had to say for the demand in general and the trend that he sees in the commercial vehicle space.
When you look at commercial vehicles, the growth drivers for commercial vehicles is largely infrastructure development, investments in industry, etc. And I think all those areas, mining, infrastructure, investments, manufacturing sector, all of these are doing relatively well now. We are seeing consistent growth. We are on an upswing, and we are on an upward cycle as of now. So the prospects are also pretty good, and we are seeing election year, which means investments in infrastructure may continue to go up. During an election year, it normally does. A lot of infrastructure spendings take place during this time. So I think the prospects for the rest of the year for commercial vehicles in particular are very good.
Okay. So for the passenger vehicle segments, automakers have increased prices, and also the fuel prices are they are increasing. So do you think the demand will continue in the coming months? What is your projection?
See, fuel pricing is something that keeps going up and down based on the market factors. We saw a very low price of fuel over the last few years. Then we've suddenly seen a very high, large price increase happening, and now it's tending to, it is still volatile, but it's tending to stabilize a little bit. So I think price increase in fuel is something that has a very momentary and a small short-term impact on the psyche of the customer. And the customer gets used to that, the price of the fuel. As far as pricing of vehicles are concerned, it's something that every company has to take its own decisions based on what are its cost factors, what is its competitive position in the market, whether it can pass on or not. It's a decision that the company has to take.
Okay. For the two-wheeler space, do you see domestic demand stable, especially in the rural markets?
Rural markets have been doing well, and there is no reason for us to assume that the rural markets will not do well in the future, especially with the MSP going up, forecast of a good monsoon. So we expect the rural markets to remain buoyant in the coming days and months.
Okay. Last question. What impact are you seeing on exports due to the US-China trade war?
Well, our exports are not yet impacted so much. In fact, the bigger aspect that is impacting our exports is companies running short on capacities. So that, I think, will be taken care of as we go along. But what's happening in the trade war, we'll have to wait and see, and we'll have to keep a watchful eye.
Okay, that's Vishnu Mathur of SIAM, but the numbers flashing on your screen is IndusInd numbers. Net profit is coming at 1,035 crore on an estimate of 1,027. Gross NPS have also marginally declined. I'm reading off the wire at 1.15%. For the quarter ended June as opposed to 1.17%. That's a quarter-on-quarter improvement in the gross NPA. 1,035 is the headline number on the net profit on an estimate of 1,027 crores. That's the number as we have at this point in time. We'll wait and watch and get some more details on IndusInd Bank. The interest income has also come in at about 50.7. That's the overall interest income for their for the first quarter. Interest expense at about 29.5 billion rupees. Other income at about 13 billion rupees. Net NPA is flat at about 0.5%. Headline number out of IndusInd Bank comes at about 1,035 crores on a base of, or an estimate of 1,027. If you can just pull up the number on the net profit once again on the screen, just for my reading as well. 1,035 is the headline number I saw. The comparison number last quarter was relatively lower at that's the estimate of 1,027. Let's bring in Shraddha to give us a sense of whether these numbers were in line with expectations, or is there anything that's standing out. Shraddha.
Sorry, Harsha, I would have missed some of the numbers that you've said, so I might be repeating, but net interest income has come in at 2,122 crores as compared to the number of 2,140 crores that we were expecting. So that would be a growth of about 20% or so, broadly in line with estimates. Net profit has come in at 1,036 crores versus the number of 1,027 crores that we were working with, so more or less in line with expectations. I'm going to jump directly to the asset quality parameters. So the gross NPA has remained steady, coming at 1.15% versus 1.17% in the March ended quarter. So absolutely steady is what the asset quality number seems to have remained broadly in line with, again, what the analysts were expecting. If I look at the operational performance, seems to be decent. 1,911 crores versus a number of 1,588 crores, broadly in line with estimates. Provisions have also remained more or less. It's just a marginal uptick is what the provisions have, what we have seen the provisions on a Q-on-Q basis. The other income component has come in at 1,300 crores as compared to 1,167 crores. I do want to point out that in the previous quarter, the only disappointment from the numbers that we had seen was the slowdown as far as the core fee income growth was number was concerned. So of course we don't have the breakup yet, but core fee income is something that we must watch out for. That apart, we don't really have too many numbers right now, not even the loan growth numbers. So for now, based on what we have, looks like a decent set of numbers. I think we also have Payal Pandya from Central Wealth Broking, Central Broking, who's joining us. Hi, Payal, your first reading of the numbers, is there anything amiss or broadly in line with what you were expecting?
No, the first numbers have actually been in line with our expectations, and in fact, with a 23.8% profit growth and around a 20% growth in net interest income and approx the same growth in pre-provisioning profit has been pretty good for the bank. Also, the gross NPAs have declined by 2 basis points on a quarter-on-quarter basis, which is good.
Okay. Payal, one thing that I think most of the analysts said they were going to be watching out for was the net interest margin numbers, because even in the previous quarter, Romesh Sopti had highlighted the fact that they are seeing aggressive pricing as far as some of the retail segments are concerned. We don't have the net interest margin number yet, but is there anything else that you were specifically watching out for?
No, net interest margin, yes, for sure. And also on a broader macro level, if you have to ask me, I would be watching for more understanding on how the merger and all is happening, which of course is a few months or maybe a few quarters down the lane. But even the merger with Bharat Financial would be something to watch for. Right. But in result terms, yes, margins should be taken a look at.
All right, I know it's too early to comment, but based on the data that we have so far, at 4.2 times forward price to book, do you really think these numbers leave much room for an upside as far as the share price is concerned?
Right now, upside is something which is very difficult to comment more because the market itself has turned a little more choppy, if that is the word I may use. But I think with a 4+ times of 1 year forward book value, this could be fairly priced. You know, in terms of immediate upside, there might be limited, but in the long run, of course, it will catch up.
All right, stay on hold. We also have Anusha Raheja, the analyst at LKP Securities. Hi, Anusha. Payal here believes that the numbers are broadly in line with expectations. Is that your thought as well?
Yeah, certainly the numbers are very much, in line with what consensus estimates were. And also from the asset quality standpoint, I think numbers were expected to be, gross NPAs were expected to be stable. So that has turned out to be true. And more importantly, we need to watch out for how much is the loan growth number, and plus, what's the call on the margins as well. There could be slight pressure in the margins front, but I don't think so that would be, any cause of worry as such, because I guess over the next 1 year or there are many positive levelers for the margins to improve certainly. So on the whole, numbers, were expected to be, stable and good, which has turned out to be true.
Right. What do you believe is going to be the next trigger for the stock from here on then?
I guess merger thing, by August, they should get SEBI and stakeholders approval. So that will come in the next quarter on. And this stock has to be played, from a different perspective. So although from a valuation point of view, we'll see it's trading at around 3.6 FY20, which looks slightly, on a higher end, but it's justified given its asset growth will be very strong, profitability growth will be, equally strong too. And plus, if you will see from the merger perspective, the branch network will get increased by more than 100%. So, that's closer to around 3,000 odd branches, which will be next only to HDFC Bank and ICICI Bank. And they will directly get an access to around 7.3 billion customer base of Bharat Financial. So, there could be huge cross-sell opportunities. So, although, from asset perspective, that Bharat Financial will add 5% to its assets, but in bottom line, they add closer to around 13% to its PAT. So, over the next 2 years, what I perceive is the merger could give many positive, surprises, going ahead. So that's one thing which needs to be watched out for. And plus, management has given, what I am perceiving is that loan growth also will be equally very strong too going ahead. So you have a CV cycle recovery, which is turning out to be very good for them. Last 2 quarters, CV cycle, I think growth has picked up. So even for IndusInd Bank, even for IndusInd Bank, the growth has been very strong on the retail side.
Right, Anusha. So, Point taken, Anusha. Yeah. All right, we are going to wait for the management comments to start, and the presser should start anytime now. But thank you very much for joining us, Payal and Anusha both. Harsha and Ira, back to you for now. Based on the numbers that we have, it does look like the bank management has delivered this quarter.
All right, let's move on. The tax dispute in India has cost Cain Energy $216 million. The tax department has sold some of the seized shares that Cain held in Vedanta, reducing its stake to about 3%. Saket Sundria of Bloomberg News joins us with the detail. Saket, what's going on?
Well, this is an old dispute, and it started with Cain reorganizing some of its subsidiaries in India ahead of the IPO of the Indian unit. And a few years down the line, the government claimed that they owed them around 10,000 crores of tax. That case has been going on for decades now, and recently they even went into arbitration. They have made all the written submissions. It's still very unclear why the government would take such an action, which
when the arbitration is going on.
When the arbitration is going on, because all the written submissions have been made. Hearings are supposed to begin from August 20th, and they will continue for maybe about 2 weeks from that. Definitely, there would be some outcome by the end of this year. So it's a very surprising move, and the government had taken control of these shares only in Jan-March. And within a few months, they have sold like 2% of the 5% total that Cain UK is holding in Vedanta Limited. So that's like 45% of their 40% of their holding. Apart from that, the government also has frozen the dividends that Vedanta owes Cain, which has not been given back to the Cain UK so far, and as well as some tax refund which were due to the company. So those two put together would be around $400 million again. So it's kind of still short of what the government, Cain Energy would be owing the government, but a lot of that is now being covered through these assets.
Have you heard from Cain at all?
Cain has said that they view this as a violation of India-UK bilateral investment treaty, which is, if at all, that's proven in the arbitration court, can be serious. And they have a counterclaim on the government of $1.3 billion, because that's the value of the stock that they had in Vedanta, and before that Cain India. before these kind of actions began. So if they would have sold those stocks maybe 2 years before this, they would have got $1.3 billion, and they're claiming that amount plus interest from the government now.
Sakya, thank you so much for joining us with those details. That's the keen story. Moving on, heavy rains continue to lash Mumbai and its suburbs, disrupting normal life in the financial capital. Suburban rail services have been stopped beyond Virar and are running behind schedule. Many areas remain waterlogged, leading to massive traffic jams across the city. How much worse is this likely to get before it gets better? DS Pai, head of climate prediction at IMD, now joins us on the phone. Mr. Pai, thank you so much for joining us. Is this inclement weather likely to continue? Are the rains likely to intensify?
The widespread rainfall activity is likely to continue up to 14th of July, with heavy to very heavy rainfall activity at a few places and extremely heavy rainfall at isolated places. So this is likely to continue next 3 to 4 days.
Specifically with respect to Mumbai, Mr. Pai, what's your prediction?
Actually, for Mumbai also, though there may be occasional stoppage, heavy to very heavy rainfall will be there for at least 2 to 3 days. Maybe around 12th there can be slight decrease in the intensity, but otherwise mostly that is going to persist.
Mr. Pai, just the quantum of rainfall that the western region and Mumbai have received over the last few days, is it the highest that we have seen in some time, or is this normal for this time of the year?
Generally, in the month of July, along the west coast, we get this much amount of rainfall. Occasionally, you get rainfall amount of 20 centimeter and all. No, nothing actually abnormal in this part.
All right, Mr. Pai, thanks so much for that quick update. Certainly maybe normal from a weather condition point of view, but if you look at the conditions on Mumbai's roads, are far from normal. But we'll slip into a quick break. Coming up next, Theresa May is dealing with a mutiny, virtual mutiny within her cabinet. Boris Johnson has resigned as well. We'll try and understand how markets are reading into all of this. That's coming up.
Sir, please believe me, I am in this business for the last 12 years. Okay, I'll wait for your call. Thank you so much.
They still don't know you after all these years?
क्या करें? पहचान ही नहीं है.
Simple solution है. List on the stock exchange. With listing comes recognition. Investors get interested in you. And funding happens.
Come on, yaar. I'm not big enough to list. Chal, let's leave.
There's a stock exchange exclusively for your kind of company. NSE Merge. It's the right platform for your business.
Really?
Yeah.
My kind of company?
Exactly. Get listed, get recognized. अरे भाई, हीरे की असली परख जौहरी को ही तो होती है. चल.
NSE Merge. साथ हमारा, सफलता आपकी. The SME Growth Platform from India's largest stock exchange.
Back on lunch, the headlines at this hour. Markets hold on to gains for the second straight day. The Sensex is back above 36,000.
Theresa May is dealing with a virtual mutiny within her cabinet. Boris Johnson also resigns.
Mumbai faces heavy rainfall for the fourth day. The Met Department says it may continue till Thursday.
And France takes on Belgium in the first FIFA World Cup semi-finals tonight.
All right, we're going to be focusing on earnings announcement from IndusInd Bank. The management of IndusInd Bank is going to be addressing the media in just a short while for now. But quick check on how the markets are faring at this point. Darshan is here with a closer look.
Yeah, so Harsha, we are about the 10,900 mark in trade, and we managed to hold that through the day, so that's positive. Some of the high beta counters which haven't been performing of late, be it the real estate, be it the metal index, be it the energy index, they are buzzing in trade. And the indices which have been buzzing, that is pharma, as well as FMCG, they're seeing a little bit of profit booking that's coming in. Some of the stocks that I want to highlight, first of all, Maruti has hit the 9,500 mark in trade. So significant amount of traction that's been seen on Maruti currently. And Bandhan Bank is the second stock I want to point out, has been doing extremely well for itself, trading at record highs. Let's pull up the contribution charge and you can see that, what is aiding the 70-point up move on the Nifty. It's basically Reliance, the HDFC Twins and ICICI. So basically all the heavyweights are in favor, except for TCS and Kotak Bank, which are down in trade. Some of the other counters which have been beaten over the past few days have managed to rebound. This include counters like a Shriram Transport, a Kajaria Ceramics, as well as Bharat Electronics. So these have moved, and what has not done well is some of the counters which have been buzzing over the past few days. Hexaware is down in trade, so is Sun Pharma and Page Industries.
All right, thanks for that, Darshan. Are we cutting across to the IndusInd Bank management, which I believe is, we're not. All right.
Let's move on now, perhaps to the UK Prime Minister Theresa May. She may have battled to stave off a full-blown crisis after 3 ministers quit to protest a Brexit plan. Foreign Secretary Boris Johnson, the face of the campaign to leave European Union, quit less than 24 hours after the Brexit Secretary and his deputy also quit. Bloomberg's Neera Cherik now joins us from our studios in London. Neera, what's the possible fallout of this? Brexit itself seems to be at risk.
Well, of course, the first question that everybody started asking when we got that resignation from Boris Johnson, as you say, not long after we had the Brexit Secretary David Davis resign, so it was a busy 48 hours. The first question was whether Theresa May would be facing a no confidence vote, which would put her very position at risk. It seems that most people that we've been speaking to don't see that as a very near-term possibility because, for a start, there would have to be 48 letters received in order to trigger that confidence vote, and that doesn't seem to be the case right now. So the numbers at the moment seem to be in favour of Theresa May, and that does seem to be reflecting in sterling today. Yesterday we saw cable drop as much as 0.7%, but by the end of the session it was lower by just 0.2%. It was weaker again earlier today, but now we're actually seeing it edge higher, about 0.1%, still trading below that 133 handle that we were on before we saw the declines yesterday, though. So at the moment it looks like Theresa May is hanging on. In terms of the risks to Brexit itself, well, David Davis was replaced by Dominic Raab, who is pro-Brexit, but of course it's very unlikely he would have been put in that position by Theresa May if he did not support her Chequers plan. So for the moment it looks like her plan that came out of Chequers is getting some support, but of course we're awaiting further details on that later this week, and we're yet to hear the full EU reaction to it as well.
Neera, many thanks indeed for joining us with those details. Neera Cherik reporting from London on Theresa May and the political fallout. Let's now go across to the management of IndusInd Bank as they address the media on their numbers.
Grew by 5%, revenue grew by 5%, and profit after tax grew by 9% quarter on quarter. So growth-wise, I think all around good performance. Also CASA. CASA was Y growth of CASA was 37%, and within CASA the savings bank growth was as high as 51%. CASA as a whole stands at 44% for us. So growth-wise, I think good. Bottom line also, both operating profit and net profit grew pretty handsomely. For the year-on-year, net profit grew 24%, and quarter-on-quarter it grew 9%. In terms of profitability also, you're seeing all the vectors have improved. ROA went up by 5 basis points to 1.91. ROE has also moved up about 100 basis points to 17.25. Net interest margin, there was a little shrinkage because of the lead lag between the pricing of the books. The MCLR came later, and there was some increase in the cost of deposits. So NIM came in at 3.92 against last quarter of 3.97. So ROA, ROE, earnings per share, all improved. So the profitability also showed. Cost to income ratio actually fell also. Cost to income ratio came down to 44%, which was actually our target for March 2020. We had said we'll reduce our cost to income ratio by 200 basis points. to 44%. So we are at slightly above 44%. And I think most importantly, asset quality. Asset quality, there was a pretty robust improvement in the quality of our loan book. Gross NPAs at 1.15 were lower than even last quarter and probably are amongst the lowest in the industry now. Our credit cost fell from 19 basis points last quarter to 14 basis points this quarter. And most importantly, slippages is one area where we all also focus on. Slippages is the additional gross NPAs. They fell from 2.68% last quarter to 1.31%. Apart from that, our restructured book is now as low as 5 basis points. So there's hardly anything left in the restructured book as well. And our asset reconstruction with the sales to the ARC is down to 0.3%. So overall, I think asset quality has shown a pretty handsome sort of improvement. Apart from that, we have added 1 million new customers during the quarter, and we are now at a total of 12 million customers. I talked about earnings per share. Analyzed the earnings per share are now 69 rupees, and for the quarter it was 17.25. Other than this, the branch expansion program is going apace. What you see is that only 10 new branches were handed over during the quarter, but a lot of them are works in progress. So we are well on our way to achieve our target of doing 200 branches plus during the full year. So that's a summary of the headlines. Net profit growth of 24%. I think the only other issue to be mentioned is that the profit growth, core profit growth is actually 33%. If you take out trading income, and I think the profit would have been even much higher, but for the fact that you know that GSEC has created a sort of GSECs which was sitting on very large profits for the industry as a whole, because GSECs went up by as much as 50 basis points during the quarter. That eroded a lot of the profitability of the banking system. There was a mark-to-market loss of 86 crores, which we have provided for fully, and we have not used the amortization dispensation which has been given by the regulator on that. So we have made a full provision of the mark-to-market loss at the end of the quarter, which for all product categories came to 86 crores, and we have made a full provision of that. So that's a summary of the quarter's performance, and we open to take questions.
Thank you very much. Ladies and gentlemen, we will now begin the question and answer session. Participants on the audio call, if you wish to ask a question, you may press star and 1 on your phone. By the time the questions queue up, I would request to take the questions from the venue.
Yeah, will you please put these questions on the queue, because there are questions being asked here also.
Yes, by the time the question queues up, you may take questions from the venue.
Yeah.
I just want to take off from the point where you stopped, that was about MTM losses. Could you give us the outlook of the coming quarters? We still see rupee under pressure, and how do you think this will pan out in the coming quarters for IndusInd Bank? How it will play out for your MTM positions going forward?
MTM positions, see, MTM position relates to government securities. Our holding is really on government securities. Rupee depreciation has got nothing to do with it. The rupee volatility actually is an opportunity. And it's reflected in the FX profits that we made. Foreign exchange profits were pretty handsome. MTM, I think, although there are market expectations of some more sort of policy rate movements, but I think the depreciation on G6 already, quarter alone it was 50 basis points. If you look at a 1 year period, it's probably 150 basis points. Our own view is that G6 will remain in this particular range now. So I don't expect any more MTM losses. Depends on what you're holding in your portfolio. right? And how much you are holding in the trading book. Our trading book is pretty small.
Also talking about growth, this quarter has been very strong. Do you expect to continue the pace at which you saw the books grow to continue in the coming quarters, particularly corporate and retail?
Yes, we are seeing a very strong throughput through our book. In fact, we grew 29% after selling down something like 8,000 crores through participation and through the bill rediscounted scheme, which we sold down to other banks. So actually the growth was much higher. We are seeing a good throughput on all the three drivers of our loan book. Our vehicle finance book very handsomely growing. Our non-vehicle retail is growing well. And of course corporate is growing at 30%. So our outlook is that we've always said that we will grow in that 25-30% range, and I think we are well set to stay in that range.
Where is the growth coming in from? You did mention the various sectors, the pockets that it's coming in from, but what really is holding the growth? More so because at this point everyone is talking about headwinds in the microeconomy, we are talking about headwinds, macro challenges as well. So what really is providing support to the growth and giving you optimism and confidence that this will continue in the coming quarters?
See, overall credit growth for the industry itself has grown very handsomely. I mean, a year ago it was 5%, now it's 12%, right? And as I said, the main drivers, you see vehicles. Vehicle finance is growing so robustly, and we feel that there is more to come because there are certain sectors which are building up now. For instance, the construction sector is starting to build up. The construction sector pulls a lot of vehicles. So we see, I think, more demand coming in. So that's one reason why we feel that the vehicle industry is in for a bull run for at least another 2 years, if not more. So that is one. On the non-vehicle retail, our portfolio is diversified. We have 8 or 9 products, and all these products, whether they're personal loans, credit cards, loan against shares, etc., all are growing well. The corporate book is more diversified, and there are certain sectors which are pulling credit. I think part of the credit is going into acquisitions, which is, for instance, the NCLT linked sales which are happening, funding those. I think that's one sector. We are seeing very good demand on power transmission. The transmission projects are going apace. We have said that there's a good demand on renewables for solar and wind energy. And I think overall capacity utilization in the industry is now nudging something like 74-75%. So fresh capacities will be created. So I think there's going to be more in terms of capex really coming up. That gives us the other big indicator, lead indicator of growth is the Purchase Managers Index. I don't know whether you will follow that, the PMI. The Purchase Managers Index is a very fair lead indicator of what's to come. And that's now nudged up to 53%. And industry growth is showing only 1%. So you see what's going to come in the future. I think we are in for a pretty secular run on loan growth.
Looking at the opportunities that you expect to come your way, would you be looking at raising capital? You are very healthy as far as the CAR is concerned, but any plans for fundraising to make sure that you are not in a sweet spot as the opportunity comes?
I think we have enough and more capital for growth capital, enough and more. And we also anticipate that once the merger with Bharat Finance is actually completed, there will be a growth in our capital because that company is also excessively capitalized. So we expect our CRAR, which is now in that 14.5-15% range, to actually go up to 17%. So net, we don't anticipate raising any capital, at least in the near future.
Just wanted to check, by when will the Bharat Financial numbers will be merged with your numbers?
So the effective date is actually 1st January 2018. So no matter what, when the physical merger takes place, the effective date is 1st January. So Q4 of last year and this full year will be consolidated numbers. So whether it happens in September or October is not so material because the numbers will get consolidated. So because the effective date is already passed.
सर रिजर्व बैंक ऑफ इंडिया ने अभी एक गाइडलाइन जारी की थी बैंकों के ऑडिटर से जुड़ी हुई, तो क्या उसके बाद आपकी बैंक भी कहीं विचार कर रही है ऑडिटर बदलने की?
हमारे ऑडिटर्स के तो वैसे ही 3 साल खत्म हो गए थे, तो हमारे तो नए ऑडिटर अपॉइंट हो चुके हैं. Ernst & Young is a new auditor.
Supti, one question on your corporate growth. You said 30% as compared to 28% of the retail. Probably the story is slightly different to some of the other banks. Wanted to get some sense about what is the nature of this corporate growth. Is it largely still brownfield? Are we also seeing some greenfield projects coming up?
Yeah, so well, want to take it?
So the entire growth is not related to projects. So there's all kinds of facilities. We have a very secular portfolio. We have working capital, of course. We have some project finance. We have other, structured finance businesses. So all of those units are grown. It's not just related to greenfield or brownfield projects. So it's an extremely diversified growth.
You mentioned renewables and transmission, as well as some of these NCLT cases, but other than that, anything else?
Yeah, so that's part of the growth, but not the entire growth. Part of the growth comes from projects and NCLT. Partly it comes from increased facilities, comes from new customers. So that's how it's divided. So we have, the entire range of corporate products has gone up. Again, sectors are extremely diversified. Our book remains diversified. If you see our presentation, you'll see a sector-wise distribution of corporate loans. That distribution hasn't changed at all. So even though we have a growth, the distribution remains more or less similar to what you saw in the last quarter. We always have sectors that we are careful about. I prefer not to mention those sectors.
We work on the positives.
We work on the positives, not the negatives.
In terms of the SME growth, firstly, what is that for the quarter? And secondly, what kind of growth are you seeing there? Are people now borrowing beyond working capital? Are they going into expansion mode?
So SME, for us, the growth mainly comes from working capital and from acquisition of new customers. But they're all in only nearly 70% of our SME growth comes from working capital facilities. So again, we have a slide which will show you how our different businesses grow. And I think the quarter-on-quarter growth in mid-sized businesses is about 4%.
We'll show you a slide which is the construct of our loan book, broken between corporates, various segments of corporate and the retail one. You'll find it in the investor presentation loaded on our website as well.
Just wanted to check, despite such a strong loan growth, the net interest income growth has not been so significant. Any reasons for that?
So it's a catch-up game because the MCLRs have been increased with a lag. And if you see that the catch-up is already happening, because you are seeing Y-on-Y growth, right? Y-on-Y you're seeing 28% and 20%. You see quarter-on-quarter, loan book growth was 4%, NII growth was 6%. So the catch-up is just a lead lag that happens between this.
Going back to project finance, a lot of banks have said that they want to stay cautious. So what is going to be your strategy? You've spoken on this, but a little more.
We've been cautious through the cycle. Yeah, so you cannot drop your credit screens when things start looking easy, because we've always believed that bad debts are created in good times. So if the good times are coming now, if they come, it's not that we'll start suddenly jumping into project finance. We were very wary and careful in what we finance and which sector we finance, but we are selectively certainly entering into project finance where it is supported by very strong sponsors.